Okay, welcome back. Video 3, we're now looking at adjustments. And we talked about in the last video the reason why we make adjustments, and the reason why we make adjusting entries is because we have a periodic basis for reporting our accounting information, and we have to report our accounting information in accordance with generally accepted accounting principles, GAAP, the rules of the game for accounting. So now I want to look at different kinds of adjustments, adjusting entries. We've looked at where they appear in the accounting cycle. They appear in adjusting entries. They appear after our trial balance. We have a preliminary trial balance that we then make adjustments to, a way of just kind of doing some little housekeeping. It's some accounting housekeeping to make sure between the trial balance, the preliminary figures, and the figures that get reported in the financial statements, in between those two is kind of the essence of Chapter 3, adjusting entries. So let's look at an adjusting entry. There's 4 basic types. The first one I want to look at is a situation where we pay cash in advance for services that we are going to receive over a period of time. So let's just call this, let's draw a diagram where we pay cash. We pay cash. Let's say it's rent, and it's $600. And we pay it January 1st. And we pay it for 6 months. We are prepaying the rent. Draw a picture of this. It would look like this. Here's the money going out. Let's just draw a long time frame. It's going to cover 6 months. So here's time period 1. Here's time period 2. Time period 3. 4. Time period 5. Time period 6. And it goes on. But on January 1st, we've paid $600. And it's going to cover rent for 6 months. 1, 2, 3, 4, 5, 6. So actually, let's go through the entries on this. When we make the payment, get a different color pen so we can really be fancy here. So the actual payment of the rent, to pay rent. When we actually pay that, let's break it down into simple pieces. We know we're going to have cash going out for $600. Cash is an asset account. Asset accounts have debit balances. And since we are decreasing cash, we're going to be crediting it for $600. Piecemealing an entry together. That's a credit, so we need a debit of $600 right here. What is it that we're going to debit? Well, we're not going to debit expense. We're going to debit prepaid rent, which is an asset account. So one asset account goes up, another asset account goes down. Assets will always equal liabilities plus owner's equity. And is it true in this case, if an asset account goes up and an asset account goes down, will this equation be violated? No, because assets went up and down the same amount of money. So we're good. The reason we call it prepaid rent is because we have paid in advance $600 for rent that's going to get prorated like this: 100, 100, 100, 100, 100, 100. 1, 2, 3, 4, 5, 6. So for the next 6 months, if we're preparing monthly financial statements, we need to take a piece of this 600. We need to take $100 every month and put it where? Into rent expense. So now what's the adjusting entry going to look like in order for us to record this? Let's get another color pen here. So at the end of the month, end of month 1, end of January, we've got our trial balance. We're sitting there, we're looking at the trial balance. We realize that in our assets we have prepaid rent. And we ask ourselves the question, have we allocated to the expense, rent expense, the appropriate amount for 1 month? Because we prepaid 6 months, $600. So at the end of the month January, we have to make an adjusting entry. And that adjusting entry is going to take $100 of this $600 and put it into expense. So we're going to be debiting rent expense, increasing the expense of $100. Expense accounts have debit balances. Increasing an account with a debit balance, we debit the account. The question is, what are we going to credit? We know we're going to have a credit of $100, right? Because debits and credits have to equal. Okay, double entry accounting. Debits and credits have to equal. What's the account? The account is this prepaid rent, right? This prepaid rent we are now going to credit $100 to reduce it, so the balance in the account is now $500. Now let's look at our accounting equation. Go back to green for a second. Do assets equals liabilities plus owner's equity? Do they? Well, let's think about it for a second. Prepaid rent is an asset account. The assets went down by $100. Now what about this rent expense? This is a little tricky. Rent expense went up $100. That's not in our accounting equation, is it? Well, the answer is yes, it is. Indirectly, it's in owner's equity. How is it in owner's equity? Because it's in our revenue minus expense. It's in our P&L. And since our expenses went up by $100, our net income went down. Therefore, our net income went down by $100. And that $100 reduction in net income is going to cause owner's equity to go down by $100. And voila, assets went down $100. Owner's equity went down $100. So the accounting equation is still in balance. So that's the first kind of an adjusting entry that we're going to be making. We pay cash. Okay, we pay cash. An example, rent, for services that we are going to receive over a period of time. We pay cash in advance. It's an advance payment. When you move into an apartment building and they say you need to pay first month and last month, when you pay something like that, you're paying in advance. On their books, they need to record that as a prepaid asset. So we're paying cash in advance. An example would be rent. And in this case, it's 6 months. So we have to prorate that $600 over the period of time that we were going to receive the benefits for it. The initial entry, it shows up as an asset account. And then we expense that over the period of time, in this case 6 months, that we're going to be receiving the service. So this example of an adjusting entry, which is the first type, is where we are paying cash in advance. The next one we're going to look at is when we are on the receiving end. We're receiving cash today for, let's say, 6 months over which we have to provide the services. I'm going to take this exact example in the prepaid rent and look at it from the other side. Look at it from the side of the equation of the landlord, the person who receives the money, and the adjusting entries that they are going to have to make. So we'll see you in the next video.